Welcome everyone to Vested Interest. This is Shane back for another stock pick of the day video. It is Monday, July 3rd. Today we're going to take a look at one out of the healthcare sector. This is GSK. Let's jump right in. And if you would do me a favor and hit that thumbs up button down below if you find any value in the content, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. Hit that subscribe button. Hit that notification bell so you're notified whenever we put out any new content. I do these videos Monday through Thursday, so if you have a company you'd like me to cover in a stock pick of the day video, go ahead and drop a comment down below. Let me know which one it is, and I'll try to work it into the rotation. I really do appreciate everyone who has taken the time to do that. It really does help out a small YouTube channel like mine grow. With the YouTube algorithm, it helps spread the videos to more people. And let's keep rolling here. This is the Vested Interest Stock Screener. This is how I set up the videos. We're going to run through this criteria. We'll take a look at and see if it meets 5 of 8 at the end or 6 of 9. If this was a bank, we'd use price to book. It's not going to be a bank with being a healthcare company, so we won't look for this one. We'll just look at the 5 of 8. This is also how I look at companies on a high level. So this is my screener that I use personally. And just because it meets 5 of 8 or 6 of 9 if it was a bank or a financial company doesn't mean I am automatically investing. It just means it goes onto my watch list. This is an initial screener. It's not the only screener. And then I do more of a deep dive into the financials, look and see how their revenue is doing. Is it growing over time? You know, are their sales increasing? Are their margins increasing? There's a lot of other information you want to look at in their financials to make sure it's a good company, understand the business. But we are going to run through this initial screener to see if this one is potentially showing a little bit of value here and might be one worth doing a deeper dive. We are talking about GSK. Check them out at www.gsk.com. That's www.gsk.com. That is their homepage where I pulled this information from. I'm going to start here at the bottom. Ever since our beginning at the Plough Court Pharmacy in London in 1715, we aimed to get ahead of the diseases that impact people's health. Our legacy companies developed a variety of medicines and vaccines that help form the building blocks of today's GSK, a biopharmaceutical company that has grown from a handful of individual founders into a company of 70,000 people. So they have arms all around the world. They started over in Europe. They have arms in Asia. They have a significant presence in the United States. Again, you can read it more up here. We are a focused biopharma company. We prevent, treat disease and vaccine, specialty in general medicines. We focus on the science of immune system and advanced technologies, investing in 4 core therapeutic areas: infectious disease, HIV, respiratory, immunology, and oncology. And then you can see here, if you were to go to their homepage, you could click on, some of the vaccines they have, specialty medicines, general medicines. They also do some other things. I know that my toothpaste is made by GSK as well. Aquafresh, I believe, is the name of it. So they don't just do drugs, but they have their hand in some pharmaceuticals or different medicines and pharmaceuticals like toothpaste as well. So again, www.gsk.com is what you should look at if you want to know more about the company. Now, the reason we're taking a look at them, down 8.65% on the day. We are talking about GSK, ticker GSK, out of the healthcare sector. Closed out the day at $40.90. 52-week range as low as $33.67, as high as $45.93, and they are a tick closer to their 52-week high than their 52-week low, almost floating in the middle, but just leaning towards the 52-week high. They have a market cap of $83.406 billion, beta of 0.27, so they are very low volatility on this one. The market being 1, anything over 1 being more volatile, anything under 1 being under volatility, or at least the volatility of the market. PE ratio, price to earnings, $14.82 per share. That's pretty low. Anything under 15 is looking pretty good in my opinion. EPS, earnings per share, sitting at $2.76 per share. Next earnings date coming up July 31st. So tune in next month if you want to see that. Forward dividend is $1.50 on the year. They are a quarterly payer. We'll see that here in a little bit. And nice starting dividend yield of 3.36%. Ex-dividend date May 16th. So we just passed that here last month. It looks like they're going to pay out in July on the 11th. So actually a pretty big break between their ex-dividend date and their payout date. Usually you don't wait, almost 2 months, but it's what it is. 1-year target estimate, at least according to Yahoo Finance, where I pulled this information from, $46.50 per share. So they see it setting a new 52-week high with about, not quite $6 in price appreciation as far as the stock price goes over the next calendar year. So that's good. Now we're going to jump over and look at dividend yield theory. To do that, we would, over here on the left, if you went to Yahoo Finance, where I pulled this information from, you'd see a lot of other tabs, the financials, analysis, statistics, For this case, we're going to go into the statistics tab. We're going to go down to dividends and splits. We're going to look at their 5-year dividend yield average of 4.91%. We compare it to their current 3.36 over here, 3.36, same numbers. I know they say forward, but it's just the current forward dividend of 3.36. That speaks to overvaluation. These numbers are inversely correlated. If this number was higher, let's say it was 5, then that would speak to undervaluation. But since it's lower at 3.36, that speaks to overvaluation, at least according to dividend yield theory. Payout ratio is 53.43, so their payout ratio is pretty low. Got a lot of room to increase that payout, buy back shares, make acquisitions, reinvest back into the company, reinvest back into drugs that they're trying to get into the market in their pipeline. And really what you want to look at for companies like this is their pipeline. What's their current pipeline? What's their future pipeline? Eventually all these drugs get to the end of their patent life, and then they are allowed to, or other companies are allowed to make what do you call them? Non-prescription or not non-prescription. Oh goodness, what do you call them? Here, let me think for a minute and I'll get back to it. But anyways, you want to look at their pipeline and see what their current drugs are and what their future drugs are, because again, eventually those drugs are being able to be made by other manufacturers when the patent runs out. So we're going to look at free cash flow here. We want growing free cash flow over time because we want growing dividends over time. And going back to 2020, you can see here $6.4 billion in free cash flow. 2021 looks like a drop down to $5.2 billion. 2022, $5.1 billion, so a bit further of a drop there. 2023 down to $4.4 billion, so not very good here. It actually looks like steadily decreasing free cash flow. They are not repurchasing their own shares, but they are paying down debt. Now you'd have to look at this repayment of debt compared to debt issued to see if it's they're repaying debt faster than they're being issued debt, because on its own it doesn't mean a whole lot. It really depends on, like I said, if they're issued, for example, negative $2.3 billion in debt. Well, if they're issued $3.1 billion in debt, then they're positive on that, right? So you'd want to make sure to check to see what the repayment of debt is compared to the issuance of debt. I don't like that they're not repurchasing shares, and I do not like this decreasing free cash flow. We're going to jump over to stockanalysis.com, and I always recommend more than one source whenever you get to looking at companies, so you make sure the information you can get is accurate and up to date. And what I meant to say on the previous slide is whenever a company's drug patent expires, other companies are allowed to make generic versions of that same drug. So you want to make sure you understand the current drugs in the pipeline, when those patents expire, and then what drugs are currently in the pipeline for approval that may be coming up, and then how long those patents will be. Because again, once a patent expires, then generic versions of that drug can get into the market and it may impact sales. That's the whole idea behind generic. And generics are usually cheaper than the initial drug is, whoever made that. And it doesn't matter what company that is. That's not just specific to GSK. That's for Pfizer. That's for Johnson & Johnson. Any of the companies like this out there that make Bristol Myers Squibb as well. So make sure you understand the pipeline, understand when the patents expire, and understand when those patents expire. Other companies can make generic versions of that same drug that many times are often cheaper. Again, 3 analysts take a look at this. They call it a consensus buy. They have a low estimate of $44. That would be a 7.5% increase from where it currently sits. All of their estimates are currently higher than where the price currently sits. Average estimate of $46.33. That would be a 13.19% increase. That's pretty much in line with what we saw with Yahoo Finance. They have a high estimate of $48, which would be a 17.27% increase from where it currently sits. All the while, you could collect that 3+% dividend yield. Now we're going to jump into statistics here. We're going to look at return on equity and return on invested capital. We want 10%, or I want 10% or higher on that return on equity. And what this does is tells you how efficiently a company is reinvesting its capital back into itself. Return on equity sitting at 33.8%, much higher than the 10% I'm looking for. Return on invested capital, 16.66%. Again, much higher than what I'm looking for there. Now, EPS growth, I like 5% or better forecasted over the next 5 years. They're calling for negative EPS growth. I don't like that. Revenue growth is forecasted at 4.82%. Let's jump over and look at their dividend. So I do not have a position here. This is another company that's not in my portfolio. I do have Pfizer and Johnson & Johnson, so I do have some biopharmaceutical companies, just not this one. I used to own this company, but they were having some issues here a while back. They were trying to sell part of the company that didn't go through. Their dividend was in potential danger of being cut. So I decided to sell them a while back, and I'm not sure if they did cut their dividend or if that's just always the way their dividend fluctuated, but you can see down here some fluctuations. But let's keep going here. They are a quarterly payer. Payout ratio, again, in the 50s. I think it said 52 or 53% for Yahoo Finance. Anything in the 50s. I like 75% or lower, so this is much lower than what I'm looking for. Dividend growth. Nice dividend growth, though, again, it's sporadic. It looks like 7.71% they're saying. Buyback yield to 0.93%, so they maybe are buying back some dividends. I just didn't see that in Yahoo Finance. Shareholder yield to 4.6%. That's good. Now, going back to 2021, you can see here, and again, this may be due to the exchange rate fluctuations over time. I'd have to dig a little bit more deeper in here, but you can see it's all over the place. 2021, 53 cents. 2022, February, 62 cents. May 2022, 35. August 2022, 36. November 2022, 31. You can read through the rest of this. The last one here in May was 37, and that's the one that's going to pay out in July. 37 cents and some fractions of a penny here. And they do pay out on the January, April, July, October timeframe. So I do like that they pay out on that timeframe. Not a lot of companies pay out in January, April, July, and October. Now to wrap this one up, let's jump back to the screener. Let's see, understand the business. That's where we started. Yep, www.gsk.com. Go ahead and check that out again if you want to know more about the business. Growing free cash flow over the last 4 years. It is not. It is decreasing. I don't like that. Growing dividend, it is growing, though I would need to do a little bit more research to see why it's sporadic like that. I'm assuming, and it is an assumption because I didn't dig into it very deeply. If anyone knows, go ahead and drop it down in the comment section below. That is because of the exchange rate discrepancy, why it's up and down like it is. Dividend payout ratio of 75% or less. They're in the 50s, so much lower than what I'm looking for there. Check valuation based on dividend yield theory. Dividend yield theory says it's potentially undervalued. Their 5-year dividend yield is in the 4%. They're currently in the 3.4, 3.5% range. Buy below current cost basis or within 15% of its 52-week low. It is not quite there yet. It would need to drop a little bit more. Return on invested capital, return on equity, equal to the industry or greater than 10%. I like 10% or plus really is what I'm looking for. They are much higher, 33% for return on equity and 16% for return on invested capital. Earnings per share growth, no, it was in the negative actually, so I didn't like that either. So 1, 2, 3, 4, it does not quite meet the 5 of 8 I'm looking for to make it onto my watch list. So this would be one that I would just skim by and move on and look at another one. That's how I would handle it. Maybe you treat it differently. That's up to you. Don't blindly copy my screener. You may have different timeline for for retirement. You may have a different investing criteria. You can use this as a starting point, but tweak it to your investment criteria, what you are looking for, how you want to set it up. It is a starting point, I will say, and it is how I look at a company, but that doesn't mean it's how you have to look at a company. And you may disagree. Maybe you don't like some of these. Maybe you don't care if it's within 15% of a 52-week low. Maybe you don't care what the earnings per share growth looks like, right? You pick out your own criteria. Maybe you like to look at margins instead of that, or the revenue growth instead of that. These are just what I look at, so take it with a grain of salt. This is what I think of the company, but it doesn't necessarily reflect on what you can think of the company or how you should look at the company. Well, that is it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. We are getting close to 1,000 subscribers. Really do appreciate everyone out there who has taken the time to subscribe. You guys are awesome. I like to see the channel grow. I like to hear in the comment section. I got a comment the other day on my portfolio update that someone's friend had shared the videos with them. I like to hear that people are sharing the videos. So continue to do that out there. Again, really appreciate all of you out there who take the time to watch, comment, and like the videos, and really appreciate all the subscribers out there. You guys are awesome. Keep the suggestions coming. I do have one for Bristol Myers Squibb. They were up today. This was a close second that I had on my watch list. I'm doing some healthcare stuff right now, so there are a couple other ones on my watch list as well. Bristol Myers Squibb will come up sometime as soon as it pulls back, probably this week. And as I think I said, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So again, drop any comments or suggestions down below in the comments section. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money and should never invest any amount of comfortable losing. Always do your own research, invest in your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.